The RBA has finally paused interest rates at 3.6%. Should you buy property now, or should you wait potentially for them to go down in value? And what should you buy? Where should you buy? Now, these are decisions for you to answer for yourself. But in this episode, like I do every month, I'll be sharing what our clients, our members have been buying over the previous month. These are deals published on the Facebook group with 30,000 people. And the intention is to inspire you and educate you. As I take you through these 9 deals, I'll be sharing why we bought them, what we like about them, and how you can also find these deals. So if you answer for yourself that I do want to invest in property, then these are what you should be buying. So stick around to the end. Now, these are all verified, the clients are tagged, and I've not just selected random good deals. I post a deal every 2 days on my Facebook group. I've been doing that for years. There are thousands there. Everyone is tagged. You can go and DM them, join the Facebook group, Australian Property Mastery with PK, and you can learn from them. You can see that this is bona fide, that this is verifiable, that this is legit. Okay, so with that, I hope you get a ton of value. Here we go. Here's deal number 1. So I'll be taking you through the pictures as well, but amazing 6.6% yield, Queensland beauty, captured for long-term capital growth and passive income. That's what we want. We want cash flow and capital growth. Amazing work by Arthur Kay here. And what I want to really highlight is just because interest rates may be on their way down, that doesn't mean that we're okay buying yielding properties around 4 or 4.5%. We want high yield, high cash flow properties because in the next 10 or 20 years of holding this portfolio, there might be an instance where interest rates are even higher than what they are now. So we need that cash flow. We never have to sell our property. Cash flow is a key ingredient. So there's a rental crisis, as you guys know. So in this location, we share that in a second, rents are rising so fast. So this will become positive cash flow in 1 or 2 years, even if interest rates don't go down. How? It's because rents will rise at least $2,000 to $4,000 in the next 12 to 18 months. So that will tip it over the edge. It's close to shops, transport, schools. None of that really has any short-term impact on capital growth, but it's a good long-term driver nonetheless. 422. Here we go. Here's the purchase price, $387,000. Needed $70,000 to get in. The rent is $495. Really, all the data factors are really strong. Okay, we don't just look at something like vacancy and say, oh yeah, vacancy is 0.65%, really low. This must grow in value. No, vacancy has no correlation with capital growth. We need other things like days on market, stock on market, affordability, job advertisements, building supplies, etc., building approvals, I should say, etc., to be really lined like stars in the sky, and that means that we're going to do well. Okay, this was bought interstate in Queensland, okay, from down south. The block size is 730 square meters, didn't catch a single flight, had the local team do their diligence for him. Okay, so it's not like Arthur caught a flight and was like, oh, okay, let's inspect this property, nor did he just go off the pictures online, because they can be fake on domain, on real estate, right? He had the local property manager inspect it for him, make sure that it's in good order and that it has rental appeal, and then he also had a building and pest inspector say, okay, this house is not going to fall down anytime soon, structural strength in the house. And because of that team, he was able to do it interstate without needing a buyer's agent, saving himself $15,000. Okay, so self-sufficient to rinse and repeat. That is the beauty of learning, of education, of knowledge. Teach a man how to fish, you feed him for a lifetime. That is the power, and he's building passive income. Here's the picture of the house. I always say, and I don't know if I should say, but nothing remarkable about it really. I mean, nice backyard, nice alfresco entertaining area, good sort of house, but it's really the numbers that are more important. Here's the second deal. Just $25,000 buys you a stunning 7.2% yielding property for $385,000. It's a cash flow house. It's really a cash cow. Why? Okay, why? Because it's got a yield of 7.2%. Now, ordinarily that would be positive cash flow, but because he's used just $25,000 to get in, and I'll share why in a second, that means that it's probably slightly negative. But once again, it's going to become positive as rents go up. Now, how's he got away with just using $25,000? It's because he's leveraged equity from his principal place of residence. So Vipul, he initially did the property investment accelerator, as you can see, he's tagged here. and bought his principal place of residence using the course. And he really honed in on the best location in Newcastle, and it went through the roof. You know, it went to the moon and back. It grew a lot. So using that equity from his PPR he's investing, that's why he's only needed to use $25,000 of real hard cash to get this property for $385,000. If you're buying a PPR, don't just buy it emotionally. Of course, sentiments and emotion is part of it, but use data as well to make sure it goes up in value. Okay, so principal place of residence using data, it shot up in value. He's getting the best of both worlds. Got his PPR, doing really well, and now he's investing as well. Some people do it the other way, some people do it this way. I sort of tend to prefer, and I think for most people, rent investing is the way, but for him, you know, everyone's strategy is different. He went this way. Okay, so get in touch with him. He's a fantastic guy. He saved himself $15,000. Well, actually, it's $30,000 if you include his PPOR. Purchase price $385, $25K required, $530 is the rent. Vacancy super low. Everything's really good. Okay, so he lives in Newcastle. We bought this in Queensland. Didn't catch a single flight. And I want to emphasize, he did not risk giving the keys to his financial future to someone else. Like, you know, like he didn't want to become dependent on some random property company or some random YouTuber for every single property purchase. He wanted to become self-sufficient, really learn the art and science of property investing. Here's the property. Really beautiful, actually. I like these palm trees at the front. They can be a bit of a hassle in terms of maintenance and gardening, but they certainly do increase owner-occupier appeal, and inside it's fully renovated. Next property, 7.2% yield cash cow property on a massive 1,219 square meter block in my favorite Queensland suburb. Okay, so I was actually featured in realestate.com.au last year, and I mentioned it. If you go to the In the Media page on my website, you can go to the article and know where this suburb is, but I've loved it, and it's gone up so much since that time. You know, it's suburb house value is growing monthly. Okay, so interest rates have gone up monthly as well, but yet the price of these properties has gone up monthly, bought well below comparable values. Is really important as an investor to make money on the way in. 422 in a really prestigious pocket of the suburb. We don't just want to buy in some random pocket and say, yeah, we got an amazing deal. We want to buy in the best area of the suburb. Aaron Steele actually done a video with him, a client testimonial that's in the client testimonials playlist right here on YouTube. There's almost 100 of those interviews, so go check it out and you can understand why and how he bought this property. But he got it for $432,000, required $75,000 of his own money to get in, $600 a week in rent, vacancy 0.58, brick, huge block. He actually lives in Adelaide, bought this in Queensland without catching a single flight, and he didn't pay a buyer's agent $15,000 to send in this property of real estate owned domain. He learned to see the matrix. He learned to spot good deals amongst real estate and domain and off-market opportunities, and so he didn't share his hard-earned money for very expensive labor hire, which is effectively a buyer's agent. Here's a property, you know, it's really beautiful. I didn't even include all the pictures here, but it's a stunning property, as you can see. Number 4, $29,000 instant equity on a 6.7% yield cash flow. Really a cash cow Queensland property with bonus tax benefits. All right, what does that mean? House value grew $29,000 or 6.4% by settlement. So he's got 6.4% capital growth, in other words, by settlement in that 1 or 2 months from contract to settlement. Like, that's what we want. And this is despite interest rates increasing. This is despite Sydney going down in value, Melbourne going down in value. Let's share where it was. 2001, built 4 bedrooms. So you can get depreciation. Okay, you can get depreciation on any house, really, as long as it was built past 1987. Even before that, still some opportunity for anyone who says you need to buy brand new houses because they have the only depreciation benefit. It's just not true, okay? You can ask Shah if you really want to. And I've also done an interview with Shah on my client interviews playlist right here on YouTube, so you can understand why and how he bought this property if you really want to. He's actually bought 2 in the last 6 months, saving himself $30,000 in buyer's agent fees. Okay, he bought this for $456,000, $80,000 was the funds required, $590 is the rent, vacancy 1.2, block size 745. This is really important, block size. Like, you know, we're okay with the block size of above 500 square meters, but the land to asset ratio is what's most important. We want to pay more for the land component, regardless of how big it is. The value that we should be paying is for the land, because that's what's rising in value. No point buying the stunning 5-bedroom property on 300 square meters block, because you're paying predominantly for those 5 bedrooms, which is just appreciating in value, not actually increasing. He bought this in Queensland from Melbourne without catching a single flight, all the due diligence done for him. And look, don't be fooled into buying an ineffective $2,000 to $3,000 course from buyer's agents that then upsell you to their full service. I see this all the time. Oh, hey, I'm a buyer's agent. I know everything about property. Here's my course. It's so cheap. Don't buy into overhyped PK courses, or whatever the case may be. But then you can't actually action it because it's not an actionable, implementable, practical course. It's just a gateway drug to upsell you to their full service. Shah had none of that, and he bought this amazing property. Check it out, 3 pics. The front is really kind of typical, right? Not much to be said. The rents are good. The renters like it. That's all that's really important to get that cash flow working. Number 5, absolutely stunning 6.3% yield cash flow deal where boots on the ground buyer's agents don't buy. There's a friend of mine, he's a buyer's agent, and he always goes on about boots on the ground, boots on the ground, boots on the ground. He's always like, oh, you got to visit the place, you got to smell the coffee, you got to smell the air, you got to pluck the flowers from the streets, you got to shake the local barber's hand. Like, that's just all BS, really. And it was funny because he messaged me one day. He's actually a nice guy. I recommend him a lot. And he messaged me. He's like, oh, PK, I'm just in Perth at the moment. I'm in this area close to Gosnells. And he's like, this area is crap. I would never buy here. And I'm like, oh, is it? And he's like, are you guys buying there? And I shared with him a property from a client 3 months ago, and I shared with him the valuation increase. It was a 100K valuation increase, both capital growth and bought under market value from one of my clients, Srijit. And he was like, okay, I stand to be corrected. Okay, so like boots on the ground doesn't matter. You don't need to visit the place. And if you do, you probably wouldn't have bought this property that Shah did, right? So this was a perfect Perth investment for 2023's economy. So it's high cash flow, good depreciation. He's ahead of the masses. Like, there's no buyer's agents here, like I just described. This person, he's not buying there because he doesn't like the place, doesn't like the look of it. Who cares what it looks like? If the numbers are good, it's going up in value, short term, long term. That's all that's important. It doesn't matter, whether you'd live in there or not. Purchase price $414, $80,000 required to get in, 500 rent per week, 730 square meters block, brick, Perth from Melbourne, and check it out. This is the property. So you might not like the suburb, but there are always good pockets of the suburb. You can see this is a solid property. It doesn't matter whether, 10 blocks from here, there's a single housing commission house. Like, that doesn't matter. People make too much of a big deal about that sort of stuff. This is what we want to be buying. And look, no one cares about your money as much as you do. And Shah really took the bull by the horn, and he's really getting ahead. So amazing work, Shah. Next one, perfect Perth brick home at 5.9% yield with bonus tax benefits to withstand interest rates. 422, 2005 built. So once again, great depreciation bonus. We don't buy a property for depreciation, but it's a bonus, right? It offsets your income. You pay less tax. This is from Lam Nguyen. Really, really ethical and diligent client. Okay, he bought this for $470, funds required $80,000, rent per week is $530, vacancy 0.45, brick, 2005 built, Perth from Melbourne. Okay, so this is the property here. And the reason I'm trying to share with you all of these properties and their pictures is you can't be what you can't see. You need role models, whether or not you look up to these deals or these clients or whatever. But you need to see what other people are doing, and that gives you confidence that, I may not agree fully with this philosophy, or may not agree fully with that property, or I think they could have done this better, but at least you're getting some proof. At least you're getting some insight into what others are doing. And then you can build on top of that. You can build off that. You can feed your confidence using all that arsenal, that collateral of what other people are doing. That's really how we strive in life. We see other people doing well, we're like, I can do better as well. Not to just be better than them, but to be better than what we were before. And so that's really the type of inspiration that I'm trying to provide by sharing these deals with you. Here's the next one. It's growing despite interest rates, potential 7.7% yield with a granny flat. So it's a solid brick home, 6% yield as is. Now, people often ask, like, Pico, do you want to always buy brick houses? Is that the only thing you buy? No. I'll be very honest, like, we're okay with Weatherboard. Brick has less maintenance. Weatherboard has more maintenance. You hold that for 10, 20 years, you're going to probably spend another $5,000, $10,000 on maintenance, but it's also easier to renovate. That's a Weatherboard house. So there's pros and cons. We don't just look at bricks. I don't just be like, oh, all these are brick houses, I'm only going to buy brick. No, you can buy a Weatherboard as well, but just be conscious about the pros and cons. The granny flat to increase rent by $250 to $300 a week, or he can subdivide this. Ken John, he's an amazing client. So he's got that value add opportunity. He can subdivide, maybe make $200,000-$300,000 in a number of years when it becomes commercially feasible to do that. Or if he prioritizes cash flow, he can put a granny flat maybe for $150,000 and increase rent by $250 to $300. So it gives him optionality depending on what his strategy is. Everyone's strategy is different, right? You can't just pigeonhole people, but you want to buy properties with value add potential. So once again, no buyer's agent fees, $15,000 you save, $380,000 purchase price, total funds required $70,000, rent per week is $440. Now that's without a granny. With a granny, it will go up to beyond $700. Vacancy 0.5%, huge block, 726 square meters, brick house he bought in Perth from Melbourne. So you can start to see the trend. We're astute property investors from Sydney and Melbourne buying. They're not buying in Sydney or Melbourne hugely negatively geared properties that are $1 million plus. They are buying in WA, they're buying in Queensland, they're buying in regional Australia. Now that'll change in a year, that'll change in 2 years. You've got to follow where the data takes you. Here's the property, really nice street appeal, as you can see here. Second to last one. Now, I promise you it's worth it. 3 properties in 18 months, 6.2% yield, growing asset in Perth. Now, this is the beauty about property investing. You just need the first deposit. If you get the first deposit at $50,000, $60,000, you buy good asset, it rises in value. You just take the equity and buy another one. Okay, that's what Sachin has done. He's bought 3 properties in quick succession. It's a renovated brick home, really low maintenance. Cash flow allows him, Sachin, to prosper through interest rates. And now, interest rates have just been paused. And so he's going to get all this surplus cash flow as and when they go down. And even if they don't go down and the worst happens and they start going up again, he's still not freaking out because it's high cash flow property. That is astute property investing. He saved $45,000 in buyer's agent fees. If he had gone to a buyer's agent, maybe they would have bought these exact 3 properties, but he would have been down $45,000. That's another deposit almost, right? So imagine how much that hurts your long-term portfolio if every time you got to pay a buyer's agent. He's tagged here. You can reach out to him. He's a super nice fellow. $355,000 purchase price, $60,000 to get in, $420 rent per week. Data is all good. Short-term data, medium-term data, long-term data, LGA data, suburb data, city-level data. We look at data across this sort of spectrum, this grid, and there's more than 30 factors that we need to tick. And it's not just a tick box exercise, but it's multidimensional. Are the trends good? Are they meeting their thresholds? Etc. What's the weighting like amongst these factors? It's a kind of a complex system, but if you find a suburb that can stream through it, just ticking everything, then you get immense confidence, okay? 0.5% or 0.15% vacancy, which is amazing. And the block size is 681 square meters. I really love that. He lives in Brisbane. He's bought this in Perth. Great going, Sachin. Here is the property. All right, and then last one, number 9, 6.7% yield, Perth Ripper. And why do I say it's a ripper? It's because it's bought $45,000 below comparables. That's... what can I say about that? It's huge cash flow, once again, to ride out interest rates. That's the common ingredient. I know I'm preaching to the choir probably, but cash flow is as important as capital growth, but don't sacrifice capital growth. You can get both of those things every day of the week. 422 with subdivision upside. I really implore you again and again to buy properties where you can add some value. Okay, you may not want to right now, you may not have the confidence to do that right now, but in a year and 2 years, 3 years, when you've got a few more properties, you'll probably be like, damn it, I wish I had bought properties that I could have added value to, because right now, i.e. 3 years down the line, the market's stagnating. I can still buy another property if I can do a makeover, I can subdivide, generate equity that way. It's really important. Recently renovated, low maintenance property, Justin Delby, amazing guy. Obviously you can see from Tassie. Purchase price 356,500, 401,500 is the comparable valuation, so almost $50,000 of instant equity. You know, you can't just go to the bank and get that equity out on day one. You got to wait 3 months, but okay, happy to wait, right? Total funds required $70,000, 460 week and rent, 700 square meters, 0.19% vacancy. The build quality is brick. Like I said, he's from Tassie. He bought this in Perth. And here's the property, you know, really nice, fully renovated. Prospective tenant would absolutely love to live here. You know, it's like a beautiful brick home with lots of trees anywhere. So those are the 9 properties. And I'm really not like sharing this to say, oh, look how good my clients are. Well, actually I am. Or how good am I? I can't take credit for any of these properties. I barely did anything. My clients just take the mentoring, they take the education, and they really run with it. It's like I'm, you know, in a relay race and I've got the baton and I've done the hard yards. I'm kind of ahead of the pack. I was the first one to run, and I've got to my client and I've passed the baton on, and then they still have to do running. It's like, okay, yes, I've given them a head advantage, I've given them a leg up, I've given them a bit of help, but they still have to run their leg. And that's like life, you know, you can't just expect people to do things for you. You can't expect to become rich, quote unquote, have immense passive income, immense net worth, just sitting on your bum, not doing anything. You can't outsource the accountability or responsibility for your financial future, no matter who says that they can do it for you, whether I say it or someone else does it. No one cares about your money as much as you do. So ultimately, you should invest in the most important real estate that's out there, and that's not out there. It's inside here. It's the 6 inches between your 2 ears. Invest in that, whether it's free or paid or whatever, but just let that marinate in so many diverse opinions, facts, education, knowledge, aspects, and then try to synthesize and find some cohesive answers to your question, how do I actually get ahead? To level up and to invest in that education, the 6 inches. I'll leave links below to my Facebook group, completely free, over 30,000 amazing members, Australian Property Mastery with PK, where these deals are actually there and all the clients are tagged, and there's thousands of other deals. And you can, like, you know, my clients are amazing people. They're happy to be DM'd. They're happy to answer your questions. You know, they actually want to help. And also I'll leave a link below to my podcast on Spotify, Google, and iTunes, Australian Property Mastery with PK, where you can just really level up and take things, you know, really be serious. Okay, I'll leave it there, guys, but thank you so much for watching this video. Thank you for being with me. Interest rates are on pause. I think we're in for another golden time in property investing. That doesn't mean that boom times are automatically back. It's not like that, but it's always a good time to buy property as long as you know where and you know how. Catch you later. Hit subscribe.